Today is going to be another short podcast-like video for you. And today is very, very important. I'm going to discuss some really important things that are important for your life and the future. Obviously, I want to start with some news about the markets and the Federal Reserve. So, crude oil is approaching $90 a barrel. The last time this happened, President Biden begged Saudi to open up some oil reserves to counter those high prices. Regardless of where commodities are going now, I believe that this could be a good time to think about selling oil, or at the very least taking some profits, and then moving those profits out of commodity stocks and ETFs, so companies that trade commodities, in favor for funds that hold contracts, future contracts, or hold the actual commodity. And why is that, you might ask? Traditionally, what investors did to preserve their wealth entering a recession was to move out of growth sectors in favor for defensive sectors. Sectors like healthcare, consumer staples, and utilities. However, last time this happened was when interest rates increased above inflation levels to slow down inflation. The economy today, as many might think, is not similar. So doing the same thing will not give you the same results. Because this time, the Federal Reserve cannot increase interest rates above inflation levels. That brings me to my second topic of the Federal Reserve's announcement to increase interest rates in March, not 0.25 basis points, but 0.5 basis points. Basically increasing interest rates not 0.25%, but increasing them 0.5%. This was enough to spook some investors, and the markets were mostly red. However, this is nothing less but laughable. I mean, using the own metrics by the Federal Reserve, the CPI, the Consumer Price Index, we had inflation in 2021. The inflation rate was 7%. Using the skewed, wrong metrics the Federal Reserve presented us. If we would measure inflation the way we measured it in the 70s, inflation would be well above 15%. It would be somewhere between 15 and 18% in 1 year in 2021, not 7%, and not the inflation target of 2%. If you want to counter inflation effectively, you have to raise inflation rates, interest rates above the inflation rate, because they're mutually exclusive. They cancel out each other. So you have to increase interest rates above inflation rates to counter inflation. And this is what happened in the 70s. However, the Federal Reserve cannot do that unless they not only crash the markets, but the government goes bankrupt. The government would collapse under its own weight of its debt. So they put themselves in a corner where, in an economic situation, where they cannot raise rates, where they cannot do anything to counter inflation. The only thing they could do, in what they probably will do until March, is shrink their balance sheet and sell off assets that will probably crash the markets. Inflation that way will not go away, but asset inflation, at the very least, will be under control once again, and then they can stimulate the economy or the markets again through politics, through more free stuff that they promise the people. So in the past, when there were rate hikes to counter inflation, they were done more or less effectively, especially before 2008, before they started quantitative easing. However, this time is different because we are in a situation where we have inflation getting hotter and hotter and interest rates that are kept low. So we're entering a stagflationary recession. We can already see the preparations for this by the Fed selling off assets off their balance sheet, and in the markets, the big move from growth investments into commodities, into things that have real value, that will hold their value during inflation, like gold, precious metals, oil, gas, and other commodities. So what could you do to defend yourself from a downturn in the markets this time, if not moving your assets to more stable sectors, to more defensive sectors? So what I'm looking into is to sell off my stocks and ETFs that are in commodities right now, which is good, but moving those profits and moving my money from commodity companies into funds that hold the actual commodity through future contracts or through storage. Of course, during a downturn in the markets, everything will go down, even defensive sectors. But the difference this time is that inflation is going to get worse. It's not going to go away. And to preserve my wealth, I think moving your money in from stocks and ETFs, ownership of companies, into the actual commodity, that will be, in my opinion, the best way to preserve your wealth. And there's funds out there that you can find, and I highly suggest you to do your own research and find those funds. Many of them have a lot of bonds in them, which I don't suggest, but there's a lot of funds that trade futures of the actual commodity. So you will have ownership, or at least paper ownership, of the actual commodity in case of a downturn in a recession that will probably start sometime this year. However, I'm not Nostradamus. I can't see the future. I still hold a lot of cash, and I slowly take profits and move them into holding the real asset, in addition to holding lots of cash. So if there's a downturn, I can buy back when there's the bottom. Alternatively, you could hold cash, but that means that you have to time the market. And the bottom of a recession is timing the market, because you don't know when that will happen. It could be a few days, it could be a few months, or even a few years. If you hold cash for such a long period, inflation will eat away your wealth. So during that period, I want to hold real things, real assets. And to end this video, I want to touch base on a pretty big topic that I talked about in previous videos on my YouTube channel and on TikTok. And those are the 4 stages a government collapses. The video is called The 4 Horsemen of the Financial Apocalypse. And we are in a very, very bad situation. We are at the beginning of something so big that nobody alive today has witnessed. The 1970s and early 80s and the 2008 crash are nothing in comparison what is about to come. If you are at the beach before a tsunami, you will notice before the wave comes that flushes through towns and destroys them, you will see the water disappearing from the beach. And looking at the current situation, not only the markets, but also the preparations the Fed is doing, we are exactly at that stage of the tsunami. And the 4 phases are always the same. Disney could make a movie about that, because it's a story as old as time. It's always the same story. So in the first stage, you have a government overspending, promising all sorts of free things. Free this, free that, student loan debt forgiven, free healthcare, blah, 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 everything for free, more money, more welfare, expansion of the government, and the people, especially in the democracy, vote for that. The second stage is when the means to pay for that welfare government expansion disappears. So the taxes you take in, the money you borrow is not enough anymore. So what you have to do is to print. And that's the next stage. It's printing. And the printing causes the inflation. We entered that stage last year, and I talked about it last year already. We are about to enter stage 3. So in the third stage, prices will increase, and you will see the people not blaming the government or themselves who caused this inflation because of their endless desire for more free stuff. So instead of blaming their Federal Reserve, instead of blaming the government who caused this issue, they are blaming farmers, companies for price gouging. And we already see this happening with the energy sector in the US. It's not the money that the government printed causing this. No. It's the evil energy companies like Exxon who caused those higher prices because they're price gouging. And instead of blaming the government, people will blame those companies and private companies and private people for that issue. And they will demand the government to do something about it. And the government will. And that enters phase 3, which are price controls. So the government will implement price controls to control those higher prices caused by inflation, caused by them. And what do price controls do? I'm asking you. Well, what do you do if you don't get paid for your work anymore? Exactly, you stop working. And this will happen when you have price controls. Those farmers who cannot sell their products, or energy companies that cannot sell their products for profit anymore, will simply stop producing. And that will cause shortages. Yes, even more shortages than we have seen last year. It's only going to get worse. And then you will enter stage 4, which is nationalizing everything, or everything going to absolute shit. So nationalizing everything, you have a totalitarian socialist government that you voted for, or there will be just a collapse of the entire financial system, of the economy of that country, and you go the Venezuela route. So this is a very important time for you to start thinking about what you want to do with your life. Things are only going to get worse. The next 5 to 10 years, the governments are already bankrupt. You really have to think about what you can do to basically survive and get through this, which is about to happen and which cannot be stopped. I talked to some of you on my blog that follow me on my blog and support me. And some of you are moving to another country. Some of you are being more self-sufficient on a farm far away from the cities. And some of you are joining communities because you are, in a specific community, which might be religious or other communities. But those are all plans and preparations to do something. Which is not a plan, is to go back to sleep and do nothing and just hope that things are going to get better on their own. And that's what I'm suggesting you not to do. What I'm suggesting you to do is to look at your own life and what you have control over in your own life and what you can do to go through this, to get through this, what will happen, and to live the best life that you can live, that is possible for you. If you like my content, please leave a like, follow me, and if you like to hear more from me, follow my Patreon blog where I post 5 times a week during the week, and where you can see my market updates and my take on the markets, and where you can talk to me directly so I can hopefully help you the best way possible. Tell me what you think in the comments below, and thank you very much for all your support on TikTok, on YouTube, and on my blog. Cheers.